Yeah. Good evening, students. How are you, students? Welcome back. Welcome back to the concluding part of this chapter, risk assessment and internal control. So, students, I earnestly hope that you must have revised from your modules what we had done in previous two sessions. Okay, so it would be, if you have revised, it would be much better for you to grasp further things. Okay, so students, we had till now studied that how study of internal control of an organization is important for an auditor, because such a study helps the auditor to identify different kinds of potential misstatements. It also helps him in identifying and assessing risk of material misstatement, and it also helps him to decide what should be his audit procedures, what should be the nature of his audit procedures, what should be the nature, timing and extent of his audit procedures. Therefore, study of internal control, you must have understood by now, is very important from the auditor's point of view. Now, auditor has studied the internal control system by going through the various documentation of the company, from organizational charts and from seeking information from officers and employees of the company, what happens, in what manner and how it is happening, what is the flow of transactions. He has understood it in a broad manner. Now he wants to evaluate it. Now, what is the meaning of evaluation, guys? Meaning of evaluation is to assess something, to estimate something, so that he can focus his energies on those areas where potential misstatements can occur. So now we shall study how auditor evaluates internal control system. What are the methods of evaluating internal control system? So first of all, we shall be going through the methods of evaluation of internal control system. Thereafter, we shall be reading about testing of controls and what is the importance of controls, what are the benefit of controls in IT environment. Thereafter, we shall be learning about provisions of Companies Act 2013 regarding internal audit and what we mean by internal audit in general. Okay, so first we shall study methods of evaluation of internal control. Okay. So what are the methods of evaluation of internal control available to the auditor, guys? There are broadly four methods. There are broadly four methods you have to remember. These four methods are narrative record. Number one is narrative record. Number two is checklist. Number three is internal control questionnaire. And number four is flowchart. So we shall study one by one what is the meaning of these methods and what is the nature of these terms, what is the scope of these methods, and what are the benefits or shortcomings of all these methods, how these methods rank with one another. Okay, so is that clear to you guys? Please let me know, is that clear to you guys? Yes. So first method is narrative record. Now narrative record means whatever the auditor finds during course of his examination of internal control, he puts it in writing form. He puts it in narrative form. So he pens down all the flow of transaction. What are the responsibility structures? What activities are being performed by whom? What are the checks? So he makes a sort of record narration. Narrative is derived from narration. So he makes a exhaustive record. He tries to make exhaustive record of all these things of the internal control activities which he has studied. So but as you can gauge that this estimate is very lengthy and cumbersome, and it is not suitable for large organizations. It is suitable only for small organizations where controls are not deeply entrenched, where controls are less formal. In small companies, in small organizations, such a method, guys, checklist is a series of questions which has to be answered in checklist form, relating to each area of the organization, relating to each aspect. Say in respect of purchases, there are say 10 to 15 questions, whether all the suppliers of from whom purchases are to be made are approved, so and so on, whether the payment is made by authorized person, and so on. There can be many questions. So similarly, checklist can be in respect of other areas, in respect of assets, in respect of sales, and this checklist has to be filled by the audit staff. So this checklist, this is the important differentiating point. This checklist has to be filled by the audit staff of the auditor. The audit staff goes and evaluates and answers these questions. Okay, so this method is called checklist. Now similar to this method is another method which is known as internal control questionnaire. Internal control questionnaire. Now, what is internal control questionnaire? This method is, guys, also similar to checklist. Here there are also a series of questions relating to each area of activity of the concern, relating to purchases, relating to sales, relating to inventories, relating to assets. But here the internal control questionnaire is to be filled by client. It is to be filled by the staff of the client. They have to give answer in yes or no, whether this thing is being followed, whether this procedure is being followed. IC is prepared by the auditor, but the answers to these questions are given by the client, by the employees of the company. Here, in case of checklist, it has to be filled by the audit staff. And here, in case of internal control questionnaire, it has to be filled by the employees and executives of the company. This is the main differentiating point between two methods. And as IC is filled by the client and their employees, so the audit staff and auditor later on can check whether the answers given are proper or not. or if some loopholes are existing, they can add further questions, so it can be modified. So when you compare it with narrative record, you can see that it was very tedious process, narrative record, but here this process can be easily modified. Both processes can be easily modified. And since this is filled by the client, it gives more liberty to the auditor and it saves his time also. Okay, guys, so you are able to understand first three methods of evaluation of internal control. That were narrative record, second is checklist, and third is IC questionnaire, internal control questionnaire. And this IC internal control questionnaire is also one of the most widely used methods in large organizations. Okay. So again, I have repeated all the three methods: narrative record, checklist, and IC questionnaire, internal control questionnaire. All the methods are clear to you guys? Now somebody is saying repeat checklist again due to certain video buffering. Now checklist is a series of questions which are framed by the auditor, say in respect of different aspects of the functioning of the entity. Say in respect of purchases, the questions could be framed as such as whether all the suppliers are approved, question number 1. At what time purchases are made when, say, stock of an item falls below a certain item, whether material purchased or purchases made are checked for quality, who checks for quality. So this type of method is known as checklist and it is filled by the audit staff. The answer to these questions is given by audit staff by their knowledge of first-hand information, by seeking information from the employees of the company, but these have to be filled by the audit staff. Here in internal control questionnaire, similar answer to similar questions have to be given by the employees and executives of the company, not by the audit staff. So this is the differentiating point between these two, IC questionnaire and checklist. And narrative record, I had already explained in the beginning. Narrative record means when the auditor writes down, pens down all the information relating to different activities in narrative form. He pens down all the information and he makes an assessment of the internal control system operating in the organization. But since such a method involves too much writing up, so such a method can be very tedious process and it is not suitable for large organizations. It is suitable only for small companies, small organizations where controls are less formalized, where controls are not so much structured. Okay, is that clear? First three methods. So I have repeated 2-3 times, and fourth method is flowchart. Now flowchart method is it is a kind of graphic representation giving a overall view of the different activities of the company in a graphic form, in a flowchart form, like say in case of purchases, in case of sales, in case of assets. It gives different authority levels who is authorized to do what in a graphic form, in a flowchart form, showing a series of transactions. So this method is also suitable for evaluating internal control, because it is in a flowchart form, and the auditor can easily see what are the loopholes, or where his focus should be. Okay, guys. So all these methods are clear to you. Number one, narrative record, checklist, IC questionnaire, and flowchart. Yes, Surbi, questions in checklist and IC questionnaire are more or less on the same lines, because they relate to same kind of activities. Only difference is who is answering those questions. The IC questionnaire is filled by client, filled by its employees, the executives, whereas checklist is supposed to be filled by the audit staff. Okay. Okay, guys. So is that clear? Yes. Now, guys, the auditor has evaluated the internal control system. He has pinpointed those areas where there is a possibility of occurring of material misstatements. He has studied the internal control system in detail and gained an in-depth knowledge of all the controls operating in the organization. Now, by now, till this stage, he has only gained a knowledge. He has not actually tested the controls. He is still in the process of gaining knowledge. He has only gained knowledge and understood the nature of controls. He has understood the nature of business of the company. He has understood the control environment. He has understood how the financial information, whether financial information produced by financial system is reliable or not, but he has not actually tested. He has not actually tested these controls. Now we come to testing of controls. How does an auditor test these controls? Okay, now we would be doing how an auditor tests these controls, and we would be learning about testing of controls. Okay, is that clear to you guys? Now, testing of controls. Now, can you tell me why testing of controls is important? Why testing of controls is important for an auditor? Auditor has made a study of control. He has studied the control environment. Now, why it is important that controls are actually tested? That controls which he has studied, why it is important for an auditor to test these controls? Can you tell me, anybody? Please drop your mails. Why it is important for an auditor to test the controls? To test the controls of organization. Please let me know why it is significant for an auditor? Anybody? Yes, 1-2 mails. Guys, testing of control is very crucial for an auditor. Say he has studied the different internal controls operating in the organization, but unless he actually tests that these controls are in fact operational and they have operated the throughout the review period, throughout the period of audit, then how he is able to going to place his reliance. It is only when controls are tested by him that his degree of reliance increases, that his degree of reliance on the internal control system increases. He can place more reliance on the controls prevalent in the organization. But if on testing the controls he finds that there is some deficiency, that there are certain deficiencies, and controls are not able to rectify those deficiencies, or these are not being counterbalanced by other set of controls, then he would be forced to revise his earlier assessment of control risk. Now he might want to raise his control risk, that controls are not operating satisfactorily, these are not operating effectively, so he might want to increase his area of checking, because control risk would become high, and to keep his overall audit risk at low level, he would want to increase his area of substantive checking. He would like to increase his area of checking. More areas would be checked by him. He would increase his sample size also. So is that clear why testing of controls is very important? Guys, you have to go inside the concept to gain what does it mean. If you understand what does it mean, the whole thing would open up before you. Okay, so is that clear? You understand the significance of testing of controls, why controls are important for an auditor to be tested. Okay guys, please let me know anything, any query. Is that clear, guys? So testing of control, students, it consists of two things. Testing of control consists of two things. Now, what are those two things? These two things are design of controls and actual operations. Design of controls and actual operations. Now, design of controls is also very important, and it is part of testing of controls. Say if the control is not designed in such a way that it is capable of preventing a material misstatement or detecting and correcting a material misstatement. You should be clear about this, guys, that control should be either able to prevent some material misstatement from happening, that control is strong enough that material misstatement cannot occur, or if material misstatement occurs, it is capable of detecting and also correcting material misstatement. Then only the purpose of control would be served, then only control would be useful. Otherwise it would be futile, it would be of no use. So is that clear that design of control is very important, and the auditor, as part of testing of controls, he also checks design of control, whether control designed in different areas are so designed that these are capable of preventing a material misstatement or detecting and correcting a material statement. Either control should be strong enough to prevent some bad thing from happening, or if some bad thing, some undesired result is happening, then it should be able to detect it and correct it and raise alarm signal to the management. Okay, is that clear to you guys? Now we come to second part, that is also equally important, actual operation. So if some control is designed in a good way and it is capable of preventing a material misstatement or detecting and correcting it, so it should actually operate. It should actually operate. If it has not operated throughout the period, then this is of no use. It can again lead to material misstatements. So it is important for the auditor to see that design of controls is proper, and also actual operation, whether the understanding of the control which he has gained, whether the design of controls which he has checked, whether it is being followed actually in practicality. Okay, so is that clear to you guys? Okay, so testing of control consists of these two parts, design and actual operations. Okay, guys. Now, how this can be done, um, how controls can be checked? These can be checked by procedural tests, like various procedures which the management has laid, which the system has been devised by the management, whether these are being followed or not, right from the start of transaction, from the initiation of transaction to its authorization, to its recording, and all aspects. So all these aspects are known as procedural tests. Okay, so this can be used by the auditor. So what are the procedures by which controls are tested? Now we can take example, like some of the procedures are the which you have also read in your audit procedures. I am giving you example like say inspection. Say we consider inspection and we consider inquiry. We also consider reperformance. Say if there is a control, we take an example, if there is a control in the company that purchases beyond this threshold limit, say purchases beyond rupees 10 lakh are to be approved by Mr. So and so. Okay, now how the auditor is going to test it, he would actually see, he would want to see those documents that if purchases of that beyond that limit have taken place during the year, whether these have been approved by that person. So he would want to check those documents. So this is inspection. This is inspection. He would check those documents, and in fact he would be knowing that there was a control which was found by the management that purchases of so much beyond so much amount are to be approved by Mr. X, and these have in fact been approved by Mr. X. So he would gain satisfaction that such control has actually operated in the organization. Okay, clear? So second type could be inquiry. Say there are certain activities in the organization which are to be done by different persons, by Mr. A, B or C, three different persons. These activities have to be performed, but the nature of activities is such that there is no written evidence, there is no audit trail. Okay, so how the auditor in such a case, there are no documents, how the auditor would ensure that in fact these three things, these activities were in fact performed by Mr. A, B and C. In absence of documents, how he is going to find out? Only recourse available to him would be inquiry. Inquiry. He can inquire from different persons within the organization. He can seek inquiries from different persons that who is performing these operations. Okay. Similarly, reperformance. Say if some procedure is mandated in the internal control to be performed by some employees. Say either stock taking or inventory taking is being done by some responsible person, or say some bank reconciliation is being performed by say head accountant every month. So if the auditor reperforms, he again goes through that process. Okay. So he would be having more satisfaction and his degree of confidence would increase. He would be entitled. He would likely place more reliance on the controls. Okay. So is that clear to you guys? Is that clear to you? And sometimes students, you have to remember that sometimes it might so happen that auditor performs certain procedures which were not actually planned as tests of controls. That actually he has not planned those tests as tests of control. So he is studying the internal control system relating to cash, and during the study of this process, he also comes to know about satisfactory bank reconciliation process being followed in the company. So although he has not tested this area of bank reconciliation, he has not performed tests of control, but by study of internal control procedure, he has actually gained a sort of evidence. So such things also can be relied upon by the auditor. Okay, guys? Okay, is that clear to you guys? Testing of internal control. Please let me know, guys, if that clear. And when the auditor actually tests these controls, and say he finds some deficiencies, he finds some areas where controls are lacking, Okay, so he can revise his assessment of controls. Okay, unless some corrective actions are taken by the management, he can revise his assessment of controls. So is that clear to you guys? Tests of control. Again, for the at the sake of repetition, I am telling you that you have to remember that tests of control includes both things. That is very important. It includes both things, design of controls as well as actual operation of controls. Both things are very important. Design of controls and actual operation of controls. Okay, guys. So should we move to next subtopic? Now, internal control and IT environment. Internal control and IT environment. Say, guys, now these days, automation is the keyword. Automation is the buzzword. So, in large organizations uh, and even in case of medium-sized organizations, the control systems are becoming more and more automated. So what do we mean by automation? That we are relying, that company is relying upon the technology, the company is relying upon the IT, upon the technology to put in place a system of controls, to put in place a system of internal controls, so that management objectives regarding financial reporting are achieved. Okay, so what are the likely benefits of such an internal control system which are backed by IT, which are in an IT environment? Okay, so these are very easy to comprehend, easy to understand, because if controls are automated, then there is a less likelihood of misstatement. These would work reliably. Okay, and further, such type of automated controls in IT environment, they can also process complex calculations in small time. Like say, for example, in case of banks, now the banks are operating on CBS, so the whole process is automated, and interest application in advances or interest payment on deposits, it is automated. So all the relevant parameters are fed into the system at the time of creation of master data, and the interest is applied at the stipulated intervals without any manual intervention. So there used to be a time, you would be surprised to know that there used to be a time about 20 years ago when interest applications used to be manual. In every account, in say every advance account, in every loan account, interest used to be applied manually. It had to be calculated on a calculator, and the same amount had to be debited to the account of the borrower. So there were chances of mistakes occurring due to human error, and this process was very time consuming also. But now it is not so. So with the click of a button, the whole command is generated automatically. Okay. So such can be the likely benefit of automated controls. So there are many others also which are written in your module, that it gives more information, analysis of information can be made. Say like if controls are automated, then the whole system can generate a host of reports which are required by the management without any sort of discretion or manual information. So this is also one of the important advantages of controls in IT environment. But you have to also remember, students, that these benefits are not without disadvantages. Although there are advantages, disadvantages or demerits are also there. Now, what can be the demerits? What can be the demerits? Like, say, I had given you the example of interest. Say, due to some error in IT system, interest is applied wrongly, or there is some software error where interest is applied wrongly, it is calculated wrongly, it has not been tested at the time of designing of software properly, or some bug has crept in. Then what would happen? The interest of the in all accounts at the whole level of bank would be applied wrongly. So technology has its merits as well as demerits. Okay, so such a thing can also happen. It is a demerit, and you can also say it is a risk. It is a risk that data is that controls are processed with inaccurate data, and also there is a possibility that some unauthorized changes are made in the software which are not properly authorized, which can lead to misstatements, which can lead to vitiation of the whole picture. Okay, so these are the advantages, and you can say disadvantages, demerits, or risks of automated controls. And manual controls are required in case some judgment is required. Say nowadays you would see in many banks there is a system that you have got a pre-approved loan of, say, rupees 10 lakhs. Now there are certain, the management there, they have devised a certain set of parameters that if the prospective loan seeker, if the prospective borrower fulfills those criteria, then his loan is automatically approved. Say if a transaction in his account is of so much level, then his loan is automatically approved. But this might not be case in case of large loans, where discretion has to be involved, and credibility of borrower, credit worthiness of borrower has to be assessed. It involves human judgment. So in such cases, manual controls are always required. There are different levels of authority through which such a proposal can move. So I have given you an example from banking industry. It can be from any industry. Okay, guys. So you broadly understand what are the advantages of controls operating in IT environment, and what could be the risks which such control pose in IT environment. Is that clear to you guys? Please let me know. Is that clear? Yes. Now we move on to another subtopic, that is materiality. Guys, you have to understand that the auditor has to consider materiality. You have already studied about materiality, I think in chapter 3. Then the auditor has to consider materiality not only at the planning stage but also during actual performance of audit. Okay, and materiality is also considered by the audit. This we had studied in this very chapter. In that materiality is considered by the auditor in identifying and assessing risk of material misstatement, that whether the identified risk is significant or not, whether it is material or not, and how it and what could be effect of any uncorrected material misstatements on the financial statements. Okay. Okay, guys. So is that clear? Is that clear, guys? And also you have to remember that once the auditor has done this exercise, he has to actually document the risk. He has to make a proper documentation what has been done by him, what risk he has assessed. He has to document it properly. Okay, so that is also important for him. Now we come to, guys, another important topic in this chapter, which is internal audit. Which is internal audit. So a natural question would be arising in your mind, guys, that till now we were studying internal control. Now what is this thing, internal audit? And what is the difference between internal audit and say its opposite? So students, you have to understand that first you have to understand that normal statutory audit, which you can refer to as which is done by externally by an auditor, which is not part of the company, which is not part of the management. Say in case of company, the statutory audit of the company under Companies Act is performed by an independent auditor. It is performed by an independent auditor who is a chartered accountant or firm of chartered accountants. Now they audit the financials. This firm of chartered accountants audits the financial statements and gives an independent report. It gives an independent opinion on the financial statements of the company, whether these financial statements as a whole are free from material misstatements or not. These might be due to errors or these might be due to fraud. Okay, the auditor, such a statutory, an external auditor gives his opinion. He gives opinion on financial statements. Now, here we are coming to internal audit. Now, what is this internal audit? Internal audit is an independent management function. Now what it is? It is an independent management function. So if you remember these two words correctly, all your problems would be solved. Any case study, any case scenario on internal audit you would be able to answer it correctly. Okay, so internal audit is an independent management function. Although it is a management function, it is coming from within the organization. It is intrinsic to the organization, but it is independent function. Within the organization, it is an independent function. So what this function is supposed to do? What is the role of internal auditor? He continuously makes a critical appraisal of the functioning of the organization. What does he do? He makes a critical function. He makes a critical appraisal. He reviews the functioning of the organization. He makes a critical appraisal of the functioning of the organization and also suggests improvements. What can be improved? That this thing is going wrong. This can be improved. How it can be improved? These mistakes are occurring. These have to be corrected. How these have to be corrected? He gives the report. So all these things lead to improvement in the way the company is being governed. Okay, so it leads to it leads to improvement in governance mechanism of the company. Okay, and so therefore internal audit involves critical appraisal of the functioning of the company to suggest to suggest improvements and value adds, and he also suggests improvements in governance structure of the company, including improvements in internal control system and organization's strategic risk management system. He also gives suggestions how risk can be better managed, how business risk can be better managed by the organization. So it is a very, very wide concept, and it involves the whole area of the functioning of the organization, and it also includes his suggestions on the improvement of internal control. Okay, and internal auditor also acts a link of communication between the external auditor, that is statutory auditor, and the management also. Okay, so what are the requirements of the statutory auditor? The internal auditor can act as a link between these two, and flow of information can also take place through him. Okay guys, so is that clear? First of all, what is the meaning of internal audit? See, if you understand clearly what is the meaning of internal audit, what is its scope, you can derive all his functions, you can derive all its advantages, you can derive all its scope from this understanding. Okay guys, is that clear what is meant by internal audit and how it is different from external audit? Although internal audit is a management function, but you have to remember that though the internal audit is considered as a management function, but even this function is independent. he has to give independent suggestions to the management what he thinks is the proper, what he thinks is proper for making improvements in the functioning of the organization. Okay, is that clear to you guys? Internal audit, its meaning. Please let me know. Now Rakesh Vyas is saying, what is appraisal? What is appraisal? Give me example. Appraisal means, Rakesh, to review something. Say we can say the plant of the company is operating uh, at less than its optimum capacity. So after 1 month, after 15 days, if the plant is continuously operating at less than its optimum capacity, then internal auditor, he has to highlight, he has to escalate this matter to the management that this is happening and what possible solutions he has to offer. Okay, because the function of internal audit is not just limited to financial reporting alone. It involves critical appraisal of the functioning of the company. So it is a very, very broad area. It is a very, very broad area. Like say, in case of, again, I am giving you example from banking industry. In banks, there are internal auditors who are posted, who are working in branches of banks on a daily basis, and they immediately identify the mistakes, and corrective action is taken on a regular basis, and they give report, and they give their report also monthly to the bank management, so that management comes to know at the first hand at the initial stage itself that what is going wrong. And it is not only important for the management to know what is going wrong, but that wrong has to be rectified also. Corrective action has also to be taken. That wrong has to be rectified also. Otherwise, there would be no purpose of internal audit. Okay, so internal auditor has also to suggest how this wrong can be rectified. He has to report to the management how this wrong can be rectified. So hope, Rakesh, the point is clear to you. So you understand, guys, what is meant by internal audit, what is its scope, what is its nature. Say if I am internal auditor of a company, then I would be reporting regularly to the company regarding what I have found during the course of my examination. Okay. So now specifically we would come to the provisions of Companies Act 2013 relating to appointment of internal auditor. Guys, this is very important, and many times questions have come in your exams. 4 marks also, in 2 marks also, questions are regularly coming in every attempt. Companies Act 2013. Section 138. Section 138 and rules and companies account rules contain provision regarding appointment of internal auditor. Now we are specifically studying this concept from the point of view of company, from the not all organization, from the point of view of a company which kind of companies are required under the law, are required under the Companies Act 2013 to appoint an internal auditor. Now there are conditions, and those companies which fulfill these conditions, they have to mandatorily, they have to compulsorily appoint an internal auditor in their company, as in accordance with provisions of section 138 and also relevant rules. Okay, now what are those conditions? These we will be discussing, and you have to remember those conditions by heart. Okay. Guys, is the video clear? You are able to hear me? Am I visible? Is the video clear? Please. Okay, so provisions of Companies Act 2013 regarding appointment of internal auditor. Now, these provisions fall in three categories. These provisions fall in three categories. What are those three categories? Number one, all listed companies. Say guys, in case of listed companies, if a company is listed, if it is listed on stock exchange, if shares are listed, then it has to compulsorily appoint an internal auditor. There is no other option. Okay, remember, all listed companies, they have to mandatorily appoint an internal auditor under law, under the provisions of Companies Act 2013. Is that clear? There is no issue about it. And second is unlisted public companies. Unlisted public companies. Now, not all unlisted public companies are required to appoint an internal auditor. Only certain categories of unlisted public companies which meet certain criteria which are specified in the relevant rules, they are only required to appoint an internal auditor. Now what are those companies? What are those criteria? These criteria are company having paid up share capital of rupees 50 crore or more in preceding year. So it is clear. First criteria is company. If a company, it is an unlisted public company, it is a public company but not listed, it is an unlisted public company, then if its paid up share capital during the preceding financial year is rupees 50 crore or more, it means 50 crore is also covered. Okay, so if it is 50 crore or more, then it has to legally, it has to compulsorily appoint an internal auditor. So if say as on 31st March 2021, a company has paid up share capital of rupees 50 crore or more, then in the coming year, in the ensuing year, in the current year 2021-2022, it would have to appoint a an internal auditor. Okay, so is that clear? Now second condition is company having turnover of rupees 200 crore or more in preceding financial year. So if the company is having turnover of rupees 200 crore or more in the preceding financial year, then it has also to appoint an internal auditor under the law mandatorily. So also guys, you have to remember that these conditions are, there is or between these conditions. There are 4 conditions, there is or between these conditions. Even if the company satisfies one requirement, then it would become liable for appointing an internal auditor. It is not necessary that all the conditions have to be satisfied. Even if the one of the conditions is satisfied, then the company would be required to appoint an internal auditor. Okay, is that clear? So we have done first 2 conditions, 50 crore paid up capital. Second is 200 crore or more than 200 crore turnover. 200 crore is also covered. Okay. Now third point is loans or borrowings from banks or financial institutions exceeding rupees 100 crore at any time during the year. Now this is also very important. Now if the borrowings of the company have exceeded rupees 100 crore at any time during the year, say as on the balance sheet date, as on 31st March 2021, the borrowings of a company were 97 crores. But during the year, say for some days or for some months, as on 31st December of the previous year, the borrowings were say 105 crores. Even then the company would be required to appoint an internal auditor because the borrowings have exceeded rupees 100 crore at any time during the year. Okay, so at any time is very important. Okay, and fourth condition is guys, outstanding deposits. Outstanding deposits are rupees 25 crore or more. Here again at any time during the year. ₹25 crore or more at any time during the year. So deposits, you understand, you might have read in your company law, deposits which are contained, the provisions regarding deposits are contained in chapter 5 of Companies Act 2013 from section 73 onwards. So if the company has accepted deposits, if the outstanding deposits of the company at any time during the year are rupees 25 crore or more, then also it has to appoint an internal auditor. So out of these four conditions, if the company satisfies any condition, then it would have to appoint an internal auditor in the next year. Okay. So what are those four conditions for unlisted public companies? These conditions relate to capital, turnover, loans and borrowings, and deposits. So these relate to four criteria: paid up capital, turnover, loans and borrowings, and deposits. So what was the threshold amount for paid up capital? It was rupees 50 crore or more in the preceding financial year. In case of turnover, it was 200 crore or more in the preceding financial year. In case of loan and borrowings, it was excess of rupees 100 crores at any time during the year. And in case of deposits, it was rupees 25 crore at any time during the year. Okay, guys. So you understand these four conditions. In case of unlisted public companies, are these conditions clear? Please let me know. Okay, so some of you are writing that you have also read it in company law, so that's very good. So you can again refreshen up your knowledge. And now we come to private companies. Now we come to private companies. Now also private companies, every private company, the same two criteria of turnover and borrowings. Turnover and borrowings. These are applicable to private company also. Say if the turnover, the same criteria which was there in unlisted public company relating to turnover and borrowings, it is also applicable to private company. Say the turnover of a private company is rupees 200 crore or more in the preceding financial year, then it would be liable for appointing an internal auditor. And if the borrowings, loans and borrowings from the banks or financial institution, it has exceeded rupees 100 crore at any time during the year, then again it would be required to appoint an internal auditor. So therefore, what we can summarize is that all listed companies, they have to appoint an internal auditor. There is no issue about it. No ifs, no buts. And in case of unlisted public companies, there are four conditions. If any of the condition is to be satisfied, then unlisted company would have to appoint internal auditor. Four conditions relate to four parameters: capital, turnover, loans and borrowings, and outstanding deposits. And in case of private companies, there are two conditions which relate to turnover and loans and borrowings from banks. Okay. So is that clear? Which kind of companies are required to appoint internal auditor? Now one query is Chaitanya. Chaitanya Singhal is asking whether we have to see condition number 3 and 4 of unlisted public companies in current year or preceding year. Chaitanya, look, the structure of these conditions is such that these have to be looked at in the previous year. Say how do I know if my borrowings have exceeded rupees 100 crores or not at any time during the previous year? at any time during the preceding financial year, unless that financial year has ended. So it is only after the end of the financial year that I would be knowing that my loans and borrowings at any point of time have exceeded rupees 100 crores. Then it is quite logical. Then in the next year, I would be required to appoint an internal auditor. So is that clear to you, Chaitanya? That all these conditions, not only 3 and 4, but all 1, 2, 3 and 4, even in case of second condition, unless the preceding financial year has ended, how do I know that turnover of my company is 200 crores or more? So first financial year has to end, then only I would be able to arrive at the turnover. Okay, so is Chaitanya, is that clear? Yes, the point is clear. Now Charu is asking whether at any point of time is also there in condition number 1 and 2. No, Charu, it is there only in point number 3 and 4. Now there is a reason behind it. Now say if the turnover has already, I have achieved turnover of 200 crores, say on 15th March 2021, then obviously as on 31st March 2021, it would be either 200 crore or more than 200 crores. So there was no point in inserting at any time during the year. Similar in case of capital, if my capital has once breached the threshold limit of 50 crores, then at the end of year, either it would be 50 crores or more than that. However, in case of loans and borrowings and deposits, even if my borrowings were say 110 crores during December, but as March has come, at the close of year, the company has repaid some part of its loan. Then my borrowings, loans have reduced. So that is why it is specified at any point of time in condition number 3 and 4. Similar is the case of deposits. Now the company has accepted deposits, but it has also repaid some deposits. So the figure, it can also decrease or increase. So that is why in case of deposits and loans or borrowings, it is written as at any point during the year. Hope the point is clear to you, Charu. Okay. So some very easy, fundamental, basic examples are given in your module relating to the problems of internal audit, internal auditor. These are too simple to be discussed here. Very simple, you can do this. Because once you what I have been stressing, guys, they try to gain understanding, and remember those things by heart. Then the problem solving would be the logical conclusion of your understanding. Okay. Now a very important question comes. Who can be appointed as internal auditor? Who can be appointed as internal auditor? Now students, you have to remember that this is a very tricky answer and it cannot be just answered by common sense. So common sense would dictate auditor hai, he must be a chartered accountant, because what we have been studying, what you have been studying is that chartered accountants are supposed to do audit and they are responsible for expressing opinion. But this is true only in case of statutory auditors, those auditors who are appointed under the relevant provisions of Companies Act 2013 to express their opinion on the financial statements of the company. Now, this field is exclusive domain of chartered accountants, but not in the case of internal auditor. You have to remember that Companies Act 2013, Section 138 specifically lays down that internal auditor, he can be a chartered accountant. He can be a chartered accountant or he can be a cost accountant or any other professional. As may be decided by the board. Now this is quite wide. Now internal auditor can be any he can be any professional appointed by the board. He can be any competent person which the board thinks, which in the opinion of board he is capable of performing his function as an internal auditor, because the function, as we have already studied, that the function of internal audit is not only related to just to financial reporting or to just, it is not just limited to the reliability of items reported in the financial statements, but it is also concerned with the critical appraisal, critical review of the functioning of the company. The internal auditor has to make a review continuously. He has to make a review, he has to appraise what can be done better, how it can be done better. He has to suggest improvements in the functioning of the company, in the overall governance mechanism of the company, in the strategic risk management of the company, in the internal control systems, the controls which have been embedded by the management, which have been devised by the management. He would suggest these controls are not working properly, such an improvement is needed, otherwise frauds will occur. Okay, so these kind of things. Now, not only internal controls, but also day-to-day functioning. Okay, that in this area wastage is occurring, in there are certain small items of stores where pilferage is occurring. He has gained evidence that some pilferage is occurring and how to stop that pilferage. All kind of these things fall within the domain of, within the function of internal audit. So you can understand it is very wide. And one more important thing, that internal auditor has not only to point shortcomings. You have to remember, guys, this is very important, that internal auditor has not only to point out shortcomings in the functioning of the company, in the internal control system, but he has to get these corrected also to the extent possible. So his job is not only to find faults and to give report, but he should help the management in getting those deficiencies rectified. Okay. So who can be appointed as internal auditor of the company? Now the internal auditor of the company, he can be a chartered accountant, he can be a cost accountant, or any other professional which is found by so in the opinion of board of directors. So it gives a wide wide leeway to the board to appoint any suitable person, any professional. Say a board may appoint a banker, he is also a professional, so he may appoint a banker or some other professional as the internal auditor. So the section 138 only states that CA, cost accountant, or any other professional. Okay. And one more thing, guys, important, that is also very important, that we have understood that internal audit is a management function. So it is quite possible that internal auditor, he can be employee of the company. Say the company appoints some professional of repute, say chartered accountant, as an internal auditor, and he is on the employee of the company, he is on the payrolls of the company, but he is heading internal audit department, he is the internal auditor of the company. So, and it might so happen that the company may avail services of a chartered accountant firm to act as an internal auditor. So that CA firm is not the part of that company. It is an outsider firm, but it is providing the services of internal audit to the company. Like again, in case of banks also appoint their employees as internal auditors. Now these persons are employees of the bank, so they are internal to the bank, they are appointed by the management. Similarly, banks also appoint firm of chartered accountants as internal auditor, who provide their services as internal auditor. So although they are not internal to the bank, but they are performing in this case a management function. Okay, so is that clear? It is not necessary that an internal auditor has to be employee of the company, he can be employee of the company, or he may not be employee of the company. So is that clear to you guys? Any questions on internal audit? Any questions on internal audit? Now Pooja is asking that first you have told that it is a management function. Now you are telling that it is it can be done by CA. Pooja, you seem to be confusing two things. So what I had first told you, that internal audit is a in-house, it is a management function. Its nature is such that it is a management function, that it provides suggestions for improvements in the functioning of the company. Now, who can do this work? This work can be either done by some employee of the company, or the management can hire somebody else, some outsider. So that is why the management can either hire a chartered accountant who is external, but he is providing services and as an internal auditor. Okay, so when he is performing services as an internal auditor, he would not be he cannot perform the normal statutory audit of the same company, because though these two assignments are mutually exclusive, and this is barred by Companies Act. And Similarly, the management can also hire, can also bring some chartered accountant on its payrolls to act as an internal auditor. So what we were first studying was that internal audit is a management function. It can be done, it can be performed by anybody, by a person who is an employee of the company or somebody who is not employee of the company. In such a case, he would be giving services. He would not be on the payrolls of the company, but he would be charging fees as an internal auditor. But he would not be on the payrolls of the company. Okay. Is that clear to you, Pooja? Rakesh is asking, employee in internal audit would not give a true and fair view. Rakesh, again, I am telling you, he is not supposed to give a true and fair view. भैया आप ट्रू एंड फेयर से बाहर आ जाओ. He is not supposed, his job is not to to express opinion on financial statements. Again, I have already told you that internal audit is a very wide function. It is a broad area. It is not limited to expression of opinion on financial statements. In fact, it is not part of his job. What to talk of limitation? It is not part of his job. He cannot express opinion on financial statements. It is the job of external auditor. It is the job of statutory auditor who is required to give his opinion on the financial statements. So is that clear to you, Rakesh? Internal auditor is not supposed to express his opinion on financial statements. Is that clear? This is the duty of statutory auditor. This is the duty of external auditor. Only thing internal auditor can do, he can suggest improvements in the system. He can suggest improvements. He can suggest some methods by which the reliability of the items in financial statements can be improved upon. He can suggest certain processes which can improve the strategic risk management of the company. Okay, is that clear to you, Rakesh? Please let me know. Is that clear to you, Rakesh? Now, Sandeep is asking, sir, if there is internal auditor, he is CA, then what is the need of external auditor? Because Sandeep, external auditor, it is a legal requirement. It is also a legal requirement. Every company has to mandatorily appoint an auditor under the provisions of Companies Act 2013. You might have read it, your corporate laws, and you would be studying in your chapter on company audit also, that every company in India, it has to compulsorily appoint a statutory auditor under the provisions of Companies Act 2013, which gives his opinion on the financial statements of the company. Now, the statutory auditor is, this requirement is there for each and every company. However, for internal audit, only specified kind of companies which we have discussed as provided for under section 138 and relevant rules, those only are required to appoint an internal auditor. Is that clear to you, Sandeep? Please let me know. Yes. Now it is clear to him. Now Shivam Kumar is also saying, sir, whether he can suggest to the management how to lower the control risk. Shivam, the job of internal auditor, the domain of duties of internal auditor is to suggest improvements in internal control system, to to highlight the deficiencies in the internal control system and to suggest improvements where how things can be improved, how controls can be better devised, and what are the present shortcomings on the control. Obviously it is going to lower the control risk when the statutory auditor assesses that risk. Okay. And so there are advantages, disadvantages, objectives. These are of general things which is in your module. We have already discussed these things. These are written in point form. Again I am saying, once you understand the true meaning, true intent, true scope of internal audit, all things you can derive. You don't have to cram. You don't have to cram. You have to just remember clearly the meaning, definition, and scope of internal audit. All things are derived from it. And you have to also remember, guys, that uh, that ICAI has also issued some standards on internal auditing, and the detailed study of these standards is not in purview of your syllabus, but it is being stated in your module. Names of certain standards are given, so those who are interested, they can read these standards to understand what is the true nature of internal audit function. So different standards on internal auditing, SIA, have been issued by ICAI. Okay, so I think the concept of internal audit is more or less clear to you. So you would be happy to take a short break here. So I am also desperate to take it. Okay, guys. So see you after 5 minutes. See you after 5-6 minutes, guys. So okay. Yes, welcome back, guys. So, students, there are two more terms which are there in your module. There are two more small subtopics. One is internal financial controls. Now, students, you have to understand that this term internal financial controls, till now we had studied internal controls. This now you would say why we are studying this term internal financial controls. Now first let me explain to you that we are studying this term internal financial controls because this term has been specifically defined in Companies Act 2013 and it requires the auditor to give his specific opinion on this aspect in his audit report. Okay, the Companies Act 2013 specifically asks the auditor to give his opinion on whether the company has adequate internal financial controls system in place and the operating effectiveness of such controls. So the Companies Act has specifically cast a duty upon the auditor to state whether the company has an internal financial control system in its place and the operating effectiveness of such control, whether such control system is effective or not, whether it has operated effectively or not, what is its operating effectiveness. Okay, and it also defines what is the meaning of internal financial control. It is specifically defined in section 134 subsection 5. It is specifically defined in section 134 subsection 5 what is the meaning of internal financial control. So broadly guys, you can understand that this more or less contains all these things which are there in the definition of internal control. But since it is a specific term, you can understand it this way. Since this is a specific term used in Companies Act 2013, so we have to remember its meaning as defined in Companies Act 2013. Now, what does it say? It says internal financial control means the policies and procedures adopted by the company for ensuring orderly and efficient conduct of its business. In definition of internal control, we had also studied that one function of internal control is to ensure efficiency and effectiveness of operations. So it is worded in a different way. Intent is same, including adherence to company's policies, safeguarding of assets. It was also there in internal control. Prevention and detection of errors and frauds. Now here Companies Act 2013 specifically states that internal financial controls should be such that it should be able to prevent and detect errors and frauds. Okay. The accuracy and completeness of accounting records. Now this was which is derived from the definition of internal control, which was implicit, which was inbuilt in the definition of internal control. It is specifically stated in the meaning of internal financial control as defined in Companies Act, that accuracy and completeness of accounting records, it has to be there, and timely preparation of reliable financial information. So you can understand that all these components are more or less same what was there in internal control. However, the wording, the use of words, prevention and detection of error and fraud has been made specifically after the Satyam scandal hit the corporate world, and the amendments were made in company law prevailing at that time, and similar thing is there now. Okay, so you understand internal financial control. Why we are studying this term internal financial control? Number one, it is defined in specifically in Companies Act under section 134 subsection 5. So what does section 134 subsection 5 state? This I have read to you. These are all the more or less all the same things which we had studied in the meaning of internal control as per SA 315, but these have been worded in different way, although intent is same: safeguarding of assets, efficiency and effectiveness of operations, okay, reliability of financial information. And why this term internal financial control has been defined in Companies Act? It is because the auditor has to state in his report whether internal financial control system is in place, and what is the operating effectiveness of such internal financial control system. This much, guys, you have to understand. Is that clear? Is that clear? Now Sonu Kumar Singh is asking, give an example of satisfactory control environment. Sonu, if I understand what you are written, if I take literal meaning of it, it means that you are asking me to give an example where control environment is satisfactory. Now, control environment means the environment in which controls are operating. So, one example could be good HR policies followed by the company. Employee what are the compensation packages, and how are the working conditions, because it would lead to the satisfaction of employees. And if the employees are satisfied and employee turnover is not high, it means the company is following good employee retention policies, good HR policies. So in such an environment, controls would definitely function better if employees are satisfied. Another example of satisfactory control environment is good ethical practices followed by the management, where management is committed to integrity and ethical values. Okay, you understand? Is that clear? Yes. And there is another term, internal controls over financial reporting. It is also a very small subtopic at the end of your module, but do not leave this. Sometimes a question comes either as a 2-marker or 3-marker from these very small topics, because we are reading whole the chapter, but till the time we come to the end of chapter, we leave it. We have understood the internal control, that's all. We leave. But these two terms are very important from examination point of view. Okay. So we have already read internal financial controls, and there is one term, internal controls over financial reporting. Internal controls over financial reporting. Now, what is the difference between these two? internal financial controls versus internal control over financial reporting. Students, you have to understand that first one, internal financial control, it is a very wide term. Internal financial control, it is a very wide term. It includes safeguarding of assets, it includes reliability of financial information, it includes efficiency and effectiveness of operations, it includes prevention and detection of errors and frauds, and it is specifically defined under Companies Act in section 134 subsection 5. Whereas internal controls over financial reporting, this is a general term. This has been used in guidance note only. It is a general term used in guidance note. It is not specified in Companies Act, and it is a narrower term than internal control over financial reporting. You can understand it relates to only controls which are related to reliability of financial reporting. It does not include such things as prevention of errors and efficiency of operations. So it is more related to reliability of figures stated in financial statements, that controls which have been put in place by the management to ensure that financial reporting is reliable. Only this much you have to understand, this subtle difference you have to understand, and no more. Okay, guys. So guys, now we will do some question answer session, correct incorrect types, and we'll discuss this. We will discuss these correct incorrect types. So are you ready? I will share the screen with you. Are you ready, guys? Please let me know. Yes, guys. Are you able to see the screen? Yes. Okay, the first question is, now you have to answer whether these statements are correct or incorrect along with reasons. Students, the first question in your auditing paper is this: correct, incorrect. Some statements are given. You have to write whether these statements are correct or incorrect. And remember, you have also to give reason. You have also to give reason whether this statement is correct or incorrect. Okay. So, and also remember that unless you give reason, you would not be able to fetch any marks. If you simply write correct or incorrect, no marks are given. So you have to answer the question and also give reason, 1 line, 2 line. What is the reason why you think that this statement is correct or incorrect? Okay. Now question number 1. Only those listed companies which have paid up share capital of 50 crore or more during the preceding financial year are required to appoint internal auditor in ensuing year. Whether this statement is correct or incorrect, tell me. Only 5-7 responses till now. whether this statement is correct or incorrect. Only 7 responses till now, guys. Come on. This is the topic we have just done only half an hour before. Yes. Now, students, many of you have answered the question correctly, but few of you have not understood it and answer it wrongly. Now, the correct answer of this was that this statement is incorrect. Now, why this statement is incorrect? Remember, guys, it is a law provision that we had learned that all listed companies are required to appoint internal auditor. There is no condition attached to it. All listed companies are required to appoint an internal auditor. The condition of 50 crore was there in only in case of unlisted public companies or in case of private companies. It was not in their case of listed companies. Okay. So the statement is not correct. It is incorrect. Because what is the reason? The reason is that all listed companies in accordance with the provisions of Companies Act are required to appoint internal auditor. The paid up share capital criteria of 50 crore is no reason. It is applicable only in case of unlisted public companies, whereas here the statement says listed companies. Okay. Now come to question number 2. A chartered accountant or a cost accountant or company secretary. Now study this question carefully, guys. Study this question carefully. Do not rush. Do not rush to give your answer. Pause for few seconds and try to answer the question. A chartered accountant or cost accountant or company secretary can be internal auditor of the company under provisions of Companies Act 2013. What could be the answer? Now, students, you have to remember that while answering these questions, you have to remember, you have to study between the lines. So, I had told you that under the provisions of Companies Act 2013, a chartered accountant, a cost accountant, or any other professional which in the opinion of board is competent, he can be appointed as internal auditor of the company. So company secretary is also a professional. So chartered accountant, cost accountant or company secretary, they can be appointed as internal auditor of company. There is no bar to the appointment of CS as an internal auditor. Okay. So number 3 question. So this statement is also, this is correct. And third statement is IC questionnaire is a tool of evaluation of internal control is suitable for small enterprises. Question number 3. IC questionnaire is useful for small enterprises for evaluation of internal control in small enterprises. Tell me what we had studied, whether this statement is correct or incorrect. IC questionnaire as a tool of evaluation of internal control is only suitable for small enterprises. Is this correct or incorrect? Tell me, guys. Correct answer is this statement is incorrect, because only narrative record is suitable for small enterprises. IC enterprise is widely used in large companies because the questionnaire is given by the auditor, by the audit staff to the employees of the company of the different departments, and they give it to the back to the audit staff, and they evaluate the same. So IC questionnaire is only suitable for small enterprises. This is a wrong statement. Okay. Now next is, yes, number 4, internal auditor. Now also read statement carefully. The statement says it is not part of function of internal auditor to get misstatements corrected in the financial statement prior to audit by statutory auditors. So the statement states, it says that इंटरनल ऑडिटर को मिसस्टेटमेंट्स ठीक नहीं करवानी है स्टैट्यूटरी ऑडिट से पहले. द स्टैट्यूटरी ऑडिट अभी हुआ नहीं है और फाइनेंशियल स्टेटमेंट बन चुकी हैं, उसमें कोई मिसस्टेटमेंट है तो क्या इंटरनल ऑडिटर ठीक कराएगा कि नहीं कराएगा, ये उसका काम है या नहीं है, वेदर इट इज हिज जॉब और नॉट. It is not part of function or it is part of function. Tell me whether this statement is correct or incorrect. Question number 4. Whether it is correct or incorrect. Question number 4. Whether it is correct or incorrect. Only one male. Only one male. Whether it is correct or incorrect. Tell me, guys, what should be the right answer? It is not part of function of internal auditor to get misstatements corrected in financial statements prior to its audit by statutory auditors. Yes, hope you have understood the concept of internal audit. Yes, many of you have answered it rightly. Chaitanya Singhal, Sushil Kumar Barik, but you have not given reason. Surbhi and many others, and you are not giving reasons, guys. You have also to give reason. Again, in 2-mark question, you would not get any credit if you do not provide any reason. You would be awarded 0. So the question is, it is not part of function of internal auditor to get misstatements. ये इट इज पार्ट ऑफ फंक्शन ऑफ इंटरनल ऑडिटर. उसका काम ही यही है कि वो गलतियां ठीक करवाएगा पहले. मिस्टेक्स जो मिस स्टेटमेंट हैं ऑडिट करने से पहले ही ठीक करवा लेगा, बिकॉज ही इज सपोज टू इम्प्रूव द फंक्शनिंग ऑफ ऑर्गेनाइजेशन. ही इज सपोज टू इम्प्रूव द रिलायबिलिटी ऑफ फाइनेंशियल इंफॉर्मेशन. इफ ही डज नॉट get the mistakes rectified, then what he is there for? Okay, so this statement is also incorrect. And now we come to 5th question, number 5. This, now this is the topic. right now, internal controls over financial reporting are specifically defined under Companies Act. Just we had done just it right now. Question number 5. Internal controls over financial reporting are specifically defined under Companies Act 2013. Whether this statement is correct or incorrect. We had done it just right now 10 minutes before. Internal control over financial reporting are specifically defined under Companies Act 2013. Please let me know, guys, whether this statement is correct or incorrect. No mails till now, no mails till now. Internal controls over financial reporting are specifically defined under Companies Act 2013. Yes, some of the mails have come. This statement is also incorrect. Internal controls over financial reporting are not specifically defined under Companies Act. Only internal financial controls. Guys, you have to remember these two terms again and again in your mind, so you do not get confused at the exam time. Internal financial control is defined under Companies Act. And why it is defined? Because auditor has to report in his audit report, he has to give opinion on the internal financial control system and its operating effectiveness. That is why it has been defined under section 134 subsection 5. And internal control over financial reporting is a general term defined in guidance note only, and it is a narrow term. It only relates to controls over reliability of financial reporting. Whereas you can say internal financial control is a wide term. Okay. Is that clear? Both things are clear to you guys? Yes. Now I am showing you another screen which also has some true false question from our previous session, which we could not do in our last session due to shortage of time. So we would be doing it today. Okay. Yes. So you are able to see the screen, guys? Again, okay. The first question here is risk assessment procedures performed by an auditor are one of the components of internal control. Now tell me students whether this statement is true or false, whether it is correct or incorrect. Along with reason, risk assessment procedures performed by auditor are one of the components of internal control. Now remember, what were the components of internal control? Whether risk assessment procedure was part of internal control or not. Whether risk assessment procedure is part of internal control, is part of component of internal control. Tell me. Tell me what is the answer. Risk assessment procedures performed by auditor are one of the components are internal control of an organization. Only one mail till now, guys. We are running out of time. Please send your mails. Risk assessment procedures performed by our auditor are one of the components of internal control of an organization. Guys, no mails. I think you have forgotten the concept of components of internal control, or either you have not revised from your modules. So we had understood that internal control of an organization has 5 components. Internal control of an organization has 5 components. Now, what were those components? These components were control environment, number 1. Number 2, entities risk assessment process. Number 3, it was information system. Number 4, it was control activities. Number 5, monitoring of controls. Now, whether risk assessment procedure is part of component, no. These are performed by auditor. It has nothing to do with the statement itself says risk assessment procedures performed by auditor. So how it can be part of internal control? Anything which is part of internal control, it should come from within the organization. Whereas the statement is saying that risk assessment procedure performed by the auditor, it means it is something different which is performed by the auditor. As it is different, it is distinguished from the components of internal control. So how risk assessment procedures can be part of internal control? So this statement is incorrect. Okay, clear guys, you understand? You understand risk assessment procedures are performed by the auditor for assessing the risk. Whereas internal control system is internal to an organization. It is a process devised by the management. So by studying the internal control, the auditor assesses the control risk. Okay. Now second, objectivity in measurement of financial information leads to risk categorized as significant risks. Now, if there is objectivity in no discretion is involved, if there is objectivity in measurement of financial information, then such risk, it can lead to significant risk. Tell me, we had categorized what constitutes significant risks. What are significant risks? Now, whether objectivity, if some financial information is objective, it sticks to certain criteria. So whether it can lead to significant risk. Yes or no, whether this statement is correct or incorrect. Yes, only one response till now, Parth Shah. Only one response. Only one response. This statement is also incorrect, students, because we had understood that significant risk, that if there is discretion if there is subjectivity, if there are no fixed criteria, if there is great judgment is involved, then it can lead to significant risk. Where the decisions are objective, it cannot lead to significant risk. Only subjectivity. If decisions are subjective, if it is subject to varied interpretations, then it can lead to risk categorized as significant risks. Okay, so this statement is also incorrect. Sonu Kumar Singh has answered correctly. Subjectivity, not objectivity. So this is the correct reason. Number 3. Now, what is control environment in itself does not prevent or detect and correct a material misstatement. Whether this statement is correct or incorrect. Correct or incorrect, true or false. Study the statement carefully. Study the statement carefully. I had just given you an example of what is the control environment. What is the control environment? Somebody had asked, and I had just given the example few minutes before. So you are very clear what the control environment is. Now, control environment, whether by itself, it is control environment by itself does not prevent or detect and correct a material statement. If control environment is good, then whether it is a guarantee, whether it would not prevent or detect and correct material misstatement. Only 2 males, Parth, Shah and Khushi. Control environment in itself does not prevent or detect and correct a material misstatement. Yes, guys, come on. Yes, most of you, I think all of you have answered correctly. The answer is this statement is correct. Control environment in itself is not a guarantee. It only provides an environment. It can lead to better assessment of control risk by the auditor. But it in itself is not an assurance that some fraud or material misstatement will not occur. Okay, it can only provide a suitable environment, suitable atmosphere. Okay, and now we come to number 4. Yes, audit program is generally formulated by an auditor before understanding internal control. Now this is fairly simple, guys. Fairly simple. मुफ्त के नंबर हैं, कई बार ऐसे क्वेश्चन भी आते हैं. Audit program is generally formulated by auditor before understanding internal control of an entity. Audit program is generally formulated by auditor before understanding internal control of an entity. Question number 4. Yes, waiting for your mails. Yes, Shivam Kumar, I've got all the answers. You can check whether you have answered it rightly or not. It is not possible for me to name everybody. I appreciate effort of everybody, of every student. Audit program is generally formulated by auditor before understanding internal control. Students, when you are sending your replies, please also send question number also, because mails are coming sometimes after a lag of time. Audit program is generally formulated by auditor before understanding internal control. of an entity. Whether this statement is correct or incorrect. No mails till now. Question number 4. Also write question number. Audit program is generally formulated by auditor before understanding internal control of an entity. Yes, most of you have answered it correctly. This statement is incorrect because it is only after the auditor has understood the internal control, audit program is formulated, because it is only when he has understood the internal controls, then he would decide in detail what he has to check and how he has to check. So audit program is generally formulated only after the auditor has understood the nature of business and internal control of the organization. How if some auditor say before understanding the internal control of the organization formulates the audit program, then audit program would include too many things. He would only be doing watching and checking the bills, and he would not be in a position to dig out any worthwhile. He would not be able to bring out any material misstatements, and all his energies, all his efforts would be in the wrong direction. Okay, so that is why the audit program is formulated by the auditor after understanding. From in place of before, there should be after understanding internal control of an entity. Okay, many of you have answered correctly. Khushi, Sonu Kumar Singh, Pooja, Preksha, and many others. Guys, again, you are not mentioning reasons. If you simply write correct or not incorrect, it is just a guesswork. You would be given 0 in your exams. Again, I am repeating. Next question is number 5. Entities risk assessment process carried out by the auditor may be affected by new business model, product, or activities. Now, carefully study this statement and tell me, it is a googly. Entities risk assessment process carried out by the auditor may be affected by new business model, product, or activities. Students, always read between the lines. Always read between the lines. Otherwise, you would be penalized in your papers. You would have to cut a sorry figure. Entities risk assessment process carried out by the auditor may be affected by new business models, products, or activities. Yes, yes, guys, no mails till now, 1 or 2 mails. Parth Shah and Hina without reason, no reason has been provided by Hina. Entities risk assessment process carried out by the auditor may be affected by new business models, products, or activities. Is this statement correct or incorrect? Tell me. Yes, students, send your mails. No response till now. Question number 5. Only 2 males. Question number 5. Entities risk assessment process carried out by the auditor may be affected by new business models. Now, students, you have to understand that this was a very, very interesting statement. But most of you have answered it wrongly. The correct answer is incorrect. Although at the first instance, the statement appears to be correct, but it is incorrect. How? This statement is okay. Entities risk assessment process may be affected by new business models, products, or activities. We had understood that how entities risk assessment process is affected by new business model. Some new technology might come, some new business model might come. So persons who are already in business, they may go out of the market. But whether this risk assessment process is carried out by the auditor, tell me. I told you that entities risk assessment process is different thing, auditor's risk assessment is different thing. Now the question, the statement itself is self-explanatory that entities risk assessment process. It begins with entities risk assessment process. जब प्रोसेस ऑर्गेनाइजेशन का है, जब प्रोसेस एंटिटी का है, रिस्क असेसमेंट एंटिटी ने करनी है, तो ऑडिटर उसमें क्या करेगा? इट वाज नॉट इट इज नॉट कैरिड आउट बाय द ऑडिटर. सो दिस पार्ट इज रॉन्ग. This part is wrong. So entities risk assessment process is not carried out by the auditor. Although it is affected by new business model product, but it is not carried out by the auditor. It is always carried out by the entity. Okay. So is that clear to you, students? Is question number 5 clear to you guys? Please let me know. You have to make distinction between the risk assessment which is carried out by the entity, which is by the organization. It is an internal process. And there is a risk assessment which is carried out by the auditor. Now, entity's risk assessment is never carried out by the auditor. The auditor only sees whether the entity has carried out risk assessment process or not. He does not carry out the process. So is the statement number 5, guys, clear to you? You now learn how to correctly attempt these statements, because many tricky statements come and you have to be very clear about the concepts. Okay. Now we move on to next question. Yes. Statement number 6. Now it states that controls such as authorization for access to computer programs or data pertaining to financial information are relevant to an auditor. Now the question relates to controls relevant for an auditor. Which controls are relevant for an auditor? Now, if there is some control which provides authorization for access to computer programs relating to financial information. Now, financial information is stored in those programs. So whether controls which are put in place by the management, whether study of such controls is relevant to the auditor or not, whether it is relevant to auditor, the question states whether it is correct or not. Question number 6. Question number 6. Whether such a control which provides authorization for access to computer programs pertaining to financial information is relevant to auditor or not? Question number 6. Yes, few answers. Harsh Goyal, Charu, Vrinda Vaid. Yes, this answer, this statement is correct. Because such controls are relevant to an auditor, because it otherwise if such controls are compromised, then it would lead to risk. So these controls are relevant to an auditor because these controls pertain to financial information. जहां फाइनेंशियल इंफॉर्मेशन आगे भैया इसका मतलब है कि ये रेलिवेंट है ऑडिटर के लिए. there is no two opinion about it. There are no two opinions about it. Okay guys, so is that clear? Question number 6. Now 7. Question number 7. We have done it today. IC questionnaire involves answering of questions relating to internal control procedures by executive and employees of the company. It states कि जो IC का questionnaire है, the answers have to be given by the employees of the company. Now you have to tell whether it is true or false. Whether answers are to be given by the audit staff or by the employees in IC questionnaire, internal control questionnaire. Yes, only one male, Harsh Goel. Only one male of Harsh Goel, whether this statement is correct or incorrect. Only one male, guys. IC questionnaire involves answering of questions relating to internal control procedures by executives and employees of the company. Whether this is correct or incorrect. Only one male. Only one male. Waiting for your responses. Students, nobody. Yes, most of you have answered it correctly. This statement is also correct. IC questionnaire is given by the auditor to the company and it is filled by the executive and employees of the company. Whereas in case of checklist, it was filled by the audit staff. Okay, so guys, you have by now learned, you have by now understood how to attempt the questions and what could be thrown at you in the examination, because some statements are tricky and you have to get it. You should have crisp knowledge, you should have clarity of concepts to attempt these questions. Otherwise, you can mark many of these questions as wrong answers, and these are very scoring questions. If you answer these correctly along with reasons, you would be getting full marks. Okay, so guys, I think you have understood the chapter of risk assessment and internal control quite well. And in case there are any queries still left, you can let me know. You can let me know if there are any queries on this chapter, risk assessment and internal control. One query, Sushil Kumar Barak, he was asking to again explain question relating to entities risk assessment process. Question number 5 it was. Now, Sushil Kumar Barak, this statement is incorrect because organization risk assessment process, although it is affected by changes in business models, changes in new products, but it is not carried out by the auditor. The organization is itself concerning an in-house exercises. What are the risks in the future? What are the business risks? So the auditor is not carrying out any exercise. The entity's risk assessment process is carried out by the organization itself. The auditor only sees whether the entity has carried out such exercise or not. He himself is not carrying out these exercises. He is only carrying out risk assessment procedures, and it has nothing to do with organization's internal risk assessment process. So is that clear to you, Sushil? Please let me know. Please let me know, Sushil, if you are still on the line. Is that clear to you? Sushil, please let me know. Now, Sonu Kumar Singh is asking, what is ongoing services in monitoring control? Now, Sonu, from where you have taken it, please let me know so that I can answer it. I am opening the monitoring of controls. Yes, ongoing service. As far as I can understand, Sonu Kumar Singh, you are referring to the monitoring of control and ongoing activities. Like all controls are being monitored by the management. Controls itself by themselves are being controlled by the management. The management sees whether the controls which were intended to be operating as such are in fact operating or not. So the management is continuously monitoring these controls. Okay. So I think, guys, I have already taken more of your time, and you are also eager to leave. And so a very good night to all of you, and thanks for patient watching and listening. We would be meeting again on very important chapter 5 relating to frauds. Okay, so do not miss that class on Monday. Okay, guys, good night to everybody of you guys. Okay, thank you once again.